Hello everyone. This is Simple Management Trading. What we're looking is at the NASDAQ September contract for 2025. Today is July 16th and this is the afternoon session. The lunch hour just passed. And currently price is sitting at the first presented fair value gap for the morning session. That's exactly where it went to. And that's where it's sitting at right now. Oh, I apologize for that. Having some technical difficulties with OBS and YouTube. Okay, so price. What's price doing? Alright, so the lunch hour is here. Um, the high of lunch is right here. Price went up 1 o'clock New York time. It went up, took out the high of lunch, and then um, it's rejecting a bit. I'm trying to see if he's gonna go up here and take the initial range high from the 9:30 opening all the way to 10. That's pretty much what I'm looking at to see if we're gonna go there. Price did move nicely to the downside and then it bounced off of the standard deviations nicely to come back and touch the first percent fair value gap. Now the afternoon session is about to start, um, and we're gonna wait for the first percent fair value gap for the afternoon session to see what we're going to do. Let me actually switch my screen. Yeah, that's better. Now, if that 946 price holds and we get to take over, use the first percent effort value gap as a support, let's call it, we might go higher to take that high of day, and we might actually attempt to hit 23,151. So that's because I think we already said we already placed the low of the day here when the drop. I think we are very well set to go to 23,151, which is essentially what it is just standard deviation. Look, what this is, what this New York session standard deviation, these prices are, is just simply putting the high within the 9:30 to 10 a.m. range, and then it will give you the 50% of this range from the high to the low as a target, and then the 1%. You can also use the 120, the 25, the 75, the 150. That's fine. But usually at this point, you will see a turn. Okay, and if this low is already is the low of the day, which I think it is, I'm quite positive it is, unless something happens, then I think first 2389.5 will be target, and then 23,122, and if price really decides to move, then 23,155 for the afternoon session. That's what I will be looking at. I don't need this, so let me just hide that real quick because I don't need it. This is also, there we go. Now the chart looks a bit cleaner. So I'm looking at a 23.46 right now for this hour to hold. If we break that and we're rejecting for the first fair value gap, then we might go lower. And my aim will be the lunch lows. So this is your lunch hour right here. Okay, so right at 46. Okay, so it seems like that 46 is holding. I want to see it if it breaks. Now, think of this, okay? It's taking London lunch. London. Why did I put London? This is New York. Jesus, my subconscious playing tricks on me, but it's okay. I'm not your best streamer. I don't have the that charisma, which is fine. So that's the New York lunch. If you think about it, it's taking the New York lunch liquidity, the highs, and it's also correlating with the first presented for value gap. Okay, and now it's giving you a retracement. You know what's interesting? When you have the first presented for value gap, so for example, this one at 9:30 a.m., go back to your charts, and if you want just a nice scalp, a nice 10 points, 5 points, if that's all that you're looking for, just put a limit at the middle of that, okay? And then if it's coming from up towards it, put a limit and let it get rejected. Let it hit, let it get rejected, put your target at 10 pips, at 10 points, and you got 10 easy points. I talked about this in one of my previous lives, but I don't stream as consistently as others. I might stream once a month or something along those lines. Um, this is just it's fun. Now I'm looking at price right now to drop from that 46, and let's see if we can go to the lunch lows. It's 1:31 New York time. I apologize for that, which basically means that afternoon session first presented for value gap is about to be formed. So the low of this hourly candle might be 2316.75. So if I was shorting right now, which I'm not, um, so you can see here at the bottom, this is my AMP live account. This is not an Apex account. It's not a Top Step. This is actually my live brokerage account. Okay, this is not an evaluation, a prop firm, none of that. And I usually look for 10, anywhere between 5 and 15 points. Um, and today I already took mine. I took 7 points, and that was good. I took it on the up right here. But right now there's a possibility for a nice scalp up until 2316.75. It's incredible. Yeah. Yeah, I'll show you where I took my. It was right here. I was aiming for that, and I was trying to get in at 98. To be honest with you, I was trying to get in right there. Just take that and possibly close this thing, this fair value gap right here, and that was my trade. 7 points. And I'll show you. Go to executions. 2300. Two contracts. 2307. 7.5. That's pretty much what I did. And this is good for me. I'm not, I mean, if I do this 7 points, 10 points daily in a month, it's good money. You know? That could I do this? Yes, but I wasn't home at this time. And then this right here, this whole run, I was trying to fix OBS and YouTube Studio for some reason was not allowing me to connect for streaming, so I couldn't participate on this. But at this point, I wasn't at home. I was home during the open. I always let the 9:30 to 10 a.m. happen without me. I always because this gives me targets. The information that this gives me is targets. If we're gonna go low, I always aim for either the 25 to 50, 75, one standard deviations. Okay, it's gonna hit no matter what. If the price for the day is going lower, that's gonna hit. If it's going higher, it's gonna hit one of those. And then watch what happens when it hits them. It gives you a retracement of sort. So for example, if the daily bias is short, so that means you're on a bearish trend. It's going short, right? Every time it hits this 0.5 on the standard deviation, it will give you a retracement. Okay? Same here with the 1, same here with the 75. So I look at those points and I'm like, okay, I got it. I look at that and my interest goes to those points. And once that happens, I look for something. Um, for example, on this, I wouldn't have done anything here because I'm not trading below the 1 minute. I'm pretty sure on the 15 second or the 30 seconds, there's a break of structure here somehow. Um, and then that will give you your rally back to the first percenter for value gap. Okay. But I didn't. So what I would have done here and what I wanted to do was, okay, this happened. It rejected this. Okay. Because if you go to the 15 minute, this looks like a week. Let's see. No, I'm not gonna switch that. But anyways, let me see if that looks like a week. Yeah, exactly. It looks like a week. 11:30 week. So price came down and then it closed up somewhere around here. And then the next 15-minute candle came and went up. And it created this fair value gap. See that? So it came, it broke structure here, and then it left this open. And then price came back during lunch, and look where it dropped, where it stopped. Right almost at the close of that fair value gap. And then price rallied. Towards what? Towards the first percent fair value gap. That 46 keeps rejecting, you see that? Look where price is closing, right below it. Right below it. But let's talk about this trade. Why did I take it? Why did I want to, if I knew that it was going short, why did I decide to go look for my scalp to go long? Well, it's very simple. Let me remove that trade so I don't have that much in my. So you see the 930 range creates the low. That's also the low of the previous hour, which from 9 a.m. to 10 a.m. Okay. When the 10 a.m. candle opened, it took that low and then it rallied. It broke structure. Okay, and then it came back to the gap. If you put a fib from here to here, that's an optimal trade entry as well. So I had all of that lined up. Now, the reason why I didn't held for more is because what time was that? It's 10. I didn't held for more because I was just aiming for this. That's all I was doing. Um, like I said, I literally only look for five to anywhere between 5 and 15 pips. Okay, and I enter bad. I tried to enter at 98, between 90 and 98 when this dropped, but I entered on a market order, so it gave me 2300. That was my entry right there. Okay, and so it gave me 7 pips, and I let it go. And then price dropped, and then price rallied back again to the 50% of the initial range, and it held, and it came back down, went back up, then dropped again. Then the 11 hour, basically what it did was it went up to the liquidity from the previous hour from 10 a.m. and then it dropped. Pay close attention to this. Remember what I said, 23,016 with 75. Okay, it's grinding lower. That 46 held. Why am I saying this? Launch high, launch low. There's liquidity above it, plus the first percentage for value gap. And like I told you at the beginning, if you just put, if you study this, right, look at all the first percentage for value gaps. If you just, if it's going up to it, if you just put a limit there and let it hit, look for 10 pip drops, boom. Now, if it aligns with also taking liquidity, you're gonna get more than 10 points. I'll guarantee it. I can show it to you in other days as well. So just look at the chart from yesterday, and you're gonna be able to see it. Here, I'll show you. Show you just a bit. Look at yesterday. This is yesterday. See, I have the same setup. Nothing changes. So I just don't have the 9:30, 9:30, and then 10 a.m. Okay. So what's the date here? July 15th, Tuesday, July 15th. Price opens, rallies, price drops. Okay. Let me show you something. Remember what I told you about the range? Put it at the high, put it at the low. Okay. That's 25. Standard deviation, 0.25. Look what happens. Retraces to what? To the first percent fair value gap. It was very small, but it was there. Okay. And then price drops. Then price comes back, it takes that low, then price rallies. What does it rally to? First percent fair value gap, which also lines up with New York lunch high. It takes it and then it drops. Where does it go to? The 50% of the New York session, standard deviation. Right there, it hits it right there. You have this retracement because it takes these lows, the lunch lows, right there, and then it retraces. So you say it doesn't happen. Look at this. What time is this? 11:30. Where is it hitting? First percent for value gap. If you put a limit there, you would have been, let's see, 23,170.5. In drawdown, you would have been 1.5 points. And then hit, drops. See what I mean? And then by the end of the day, this is the New York opening range standard deviations. Look at the one. Where does it go to? Right here. See that? It stops right there at the one. So all of these things, you could have taken them if you just trade off of the first percent effort value gaps. Now this is the afternoon first percent effort value gap. Okay, right here. So this is, I'll show you. So 2 o'clock, and then 1:30. You'll see. So if you look at 1:30, okay, it literally is between this candle and that candle. There's a gap right there. You see it? Yeah. Let's see if I can zoom in. You see that gap right here? I just, because there's also a very small volume imbalance, I included it. That's all that I did. However, look, when price is coming to it, if you put a limit here, 120, let's call it 125.50. Put a limit on there to buy because it's coming from it to hit it. Okay, it's always gonna give you a rejection. 125, what does it go to? 136, exactly 10 pips. Go get 7 pips out of that. 7 points. So you can scalp easily. That's the problem is a lot of people are focused on these major runs. And for that, your psych has to be strong. And I'll be honest, my psych is not that strong. I can't be here with the fluctuations. You know, I just want to go in, boom, give me 10 pips, quick, make money, let's go. That's it. Okay? That's it. So now you know where the retracements happen. Look at the retracements. Study the rest of the days. Do this. Okay? Jesus. Put this here. The fib on the high of the opening range from 9:30 to 10, and then on the low. Mark the 0.25%, zero point 0.5, 0.75, and 1 standard deviations to the downside and to the upside. If your bias is short, then focus on the downside, right? Those are going to be your targets. Okay? Now you know where you can take profits when it hits those things, those points. And once that happens, okay, you can expect a retracement. So if you I've seen other streamers and other traders that they're like, okay, let me enter here, boom, and price runs against them. Then that's why you don't have to believe me. Please don't take my word for it. But go back on the days, mark it. Go back on the last 3 days, mark it. And you're gonna see the turns. Sometimes it doesn't happen at the 0.25. Sometimes it doesn't happen at the 0.75. In my opinion, what I like to use most is the 50s and the 100s. Okay, it takes a little bit more time, but the 0.25 and the 0.75 usually just get run through real quick. Not what happened yesterday. Obviously, yesterday was really a weird day. The reason being the first percent effort value gap was really small, very hard to find for a lot of people, and I had to wait. And I did take a trade. I took what, like 5 points, I think it was, and I'll show you. I'll show it to you. So short, right there, and it was 143 to 137. Okay, that's 5 pips, 5 points, and it was during lunch. Why? Because I saw where it was coming to, where it was going. It was coming off of the first percent effort value gap. Okay, and I knew that it had already been retraced at the 0.25 standard deviation, so I knew this was going to drop. Now here, I took this little trade. The reason why I took that little trade and I closed it 0.5, I was going to hold it. I kid you not, but I had to go pick up my child, okay, from her job, from her high school job. Okay, so I was like, okay, cool. I got my five. Let's go. And some of you are gonna say, then why don't you just put a stop, a break even? Then no, I'm good. Five is good. Let's go. I'm not hitting for home runs. I'm not trying to. I'm not here to stunt. I'm here to make money. Get paid. Let's go. Get paid. Let's go. Get paid. Let's go. That's it. Okay. So let's take this off. Executions. And then let's go back to present time and see what price is doing. Oh, look at that. 2320. From where? From the 46. Oh, but you said 2316. You were off by 3.75 pips. Points. I keep calling them pips, but they're points. It's futures, not forex. Yeah, by 3.5 points. It's crazy, isn't it? That is crazy. I might do a series. What's that low? 23, 23.20 even. Watch the 2 o'clock hour come and take that low and hit 23.16. That would be funny. Okay, so now you have the range for the afternoon session. Okay, and you can do the same thing. So you have the high and the low. Now you see how this didn't give us a, I don't see first percent effort value gap for the afternoon session here. Up until right there. There's a little tiny one right there. See that? You see that? I don't see any other one here. Well, there's this. There's that imbalance. Well, that could be, and there's this imbalance right here. So if anything, if I need to mark something, then I will mark that imbalance. Okay. So, and remember what I told you. So I didn't see a form. Do that, and let me change colors because purple always determines my first percent effort value gaps. That's just what it is. Okay. That's the first. You agree with me? That's the first sort of gap that's within that range, right? There's nothing else in between. Absolutely nothing. Okay. All right. Again, if you were to put a limit there, drops, gives you 10 pips. 42, 34, 28, 16 points. Now let's do the ranges, the targets. 2312, 2305, 2291 for the standard deviations for the afternoon session on the downside. Now, if price takes off, then we're gonna go for the lunch lows. Remember I said that. Which one lines up to that? It could be the 200, the 2 standard deviation, or the 2.5. It sure seems that it wants to drop to the 2316, right? Slowly but surely. Oh, was the low on that? 2319.75 came to the low, rallied. Well, look at that. We're just gonna leave it there for a bit, and then I'm gonna end the stream. In the meantime, I'm gonna get me some coffee.